So we are live now.
Okay.
Perfect. Welcome everybody. Thanks a lot for joining us on a Thursday. I see some questions have already started to come in. But let me welcome Vivek Sharma. You've already been interacting with him, and I'm back. I'm your moderator for the day. I think we'll start with the rebalance update for this month, followed by addressing the 2 or 3 major questions that we are hearing from most of our subscribers. And then, of course, we'll take more questions from the chat box as well. So, Vivek, I'm just making you the host. If you can share your screen. Yeah, you're the host.
Okay.
Just making you the host. If you can share your Perfect. Yeah, I can see your screen.
Okay.
Yeah. Yeah. This is the agenda for the day. We've discussed this. I think most of you already know about ST. So maybe we could skip this part, but all the information is over here for you to, have a look at it again. We are, of course, around since 15 years and we have a lot of clients now whom we are serving. We have a AUM of 1500 plus crores, and we have both small case, Picrite and PMS services. Talking about Gulaq, as you all are associated with Gulaq, specifically it's the retail investment advisory arm of ST, focusing on creating portfolios using quant algorithms. And we have been focusing on catering to institutional clients, but like you all would know, 3-4 years back, we realized that our portfolios could also serve retail clients like you and me who have lower ticket sizes to start with, lower amounts of money to start with. That's how Gulaq was born. It is present on both small case and Picrite platforms. And we have already served more than 20,000 clients in the last 2 years. Now, moving on, taking a quick look over the team, you would have interacted with all the 3 of us. There are definitely other members of the team who are very critical to where we are right now. But over here, we have Sandeep, who's the founder and CEO of ST, Vivek, who's the investments head, and myself, I'm the business and growth manager. Again, some disclaimers, quickly going over it, because, as you know, we are SEBI registered intermediaries. We are registered investment advisors, and it is our responsibility to make you aware of all the risks associated or the disclosures that are associated with you investing in this space. So please feel free to pause the video and have a look at all of these. Now, coming to the rebalance update for the month, you would see that we have moved 10% weightage from large cap and moved more towards small cap this month. This is the market-wise allocation. You can see the July weightages, and the changes are in the last column, which is to the rightmost. Then sector-wise weights. Now, interestingly, because of the changes in the market conditions after the elections, so before the elections, we were focused more on momentum. That was a factor that we were very heavily relying on. But because of changes in the market dynamics, now we have changed our focus from momentum to quality. So based on that, currently, if you look at the sector-wise distribution, we are heavy on consumer staples with 44% weight being added to it. And we have reduced quite a bit from healthcare, energy, consumer discretionary, etc. So if you see the rightmost column, that shows the changes, but the July 24 column will show you the different sectors and how our portfolio for the month of July is distributed amongst the different sectors. This is just a brief on the different kinds of portfolios we have. I believe most of you now understand why we call our portfolios gears, because it's based on the analogy of driving a car. If you're moving too fast, if the market conditions support you, or if the driving conditions support you, you will be on gear 6 or the highest gear that's there in your car. Similarly, if the market conditions are supportive, we see that it's going up, or if let's say your personal situation is such that you're able to take risk, you're able to take 100% equity, we would suggest that you invest in year 6, which is the most aggressive portfolio because it is 100% equity. If you feel no, you are slightly conservative, you would want to have some debt or some, you don't want so much of volatility, you will move down the gears. Just like you, while driving, you reduce your speed if you're not too comfortable. Okay, now coming to our performance, we can quickly go over this. We have monthly as well as annual performances. All the more than 1 year, the performance that you see are CAGRs, compounded average annual growth rates. So you've seen that we have performed quite well since a very long time. Our returns are in the second column, under Gulaq year 6. The next one talks about the benchmark, which is the multi-cap index. And alpha basically means how much we are producing in a specific time period over and above the benchmark. So that's the last column, which is in green. Yeah, we can move to the next slide. So this is the Gear 5 performance. I think Gear 4 at the title is a little incorrect. It is actually Gear 5 that we are looking at. So Gear 5 was launched in September 2022. It has 80% equity and 20% debt. And again, the alpha is positive. It's all in green as seen in the last column. But the actual return of Gear 5 across different time periods is in the second column, which mentions Gulaq Gear 5. So this is just for you to again pause the video and have a look if you want to look at the different portfolios and how they have performed. Similarly, this is Gulaq Gear 3, launched in May 2020. We have returns, and you will see that the returns are reducing as the gears reduce. This is because equity component reduces, the debt component increases. So in markets which are fairly stable or going up, of course, equity performs better, and that's why portfolios which are high on equity will be performing better than those which have a little bit of debt component in it. Okay. Finally, we just have a comparison across all the portfolios that we have live on small case and pick right, along with the multi-cap index, which is benchmark. You will see the multi-cap index it's 100% equity. So the best comparison of that will be to Gear 6. For the rest of them, some blended index will have to be used to get an apples to apples comparison. That's about it on the returns front. Okay, one more slide. This just shows you, on an annual basis, how we have performed as compared to the benchmark, which is the bar chart on the right. So you can see in different years, the blue bar represents Gulaq's performance and the orange bar is Nifty Multi-Cap, which is our benchmark index for Gear 6 specifically, because it's 100% equity. So you can see how much alpha that we have been producing. It's been pretty good overall in the long term. And on the left side, you can also see how 100 rupees invested in June 2020 will be 4 years from now. So 100 rupees would have grown to 719 for Gulaq Year 6 and to around 300 for the Nifty Multi-Cap Index. So we are taking a long-term approach. That's what we advise all our investors, because in investing, it's always long-term. In trading, it could be swing or shorter term. Okay. So the elephant in the room. Basically, what is everyone talking about? Like, what is everyone thinking, but maybe not discussing? There are two major questions that had been coming to us so far. The first one is on the high churning of stocks this month. And almost everyone is asking us this question. And the second one is on the rebalancing that happened and the issues that few of our investors faced who could not rebalance till the 2nd of July because Oil India Limited had a bonus issue on the 2nd of July. So a lot of people faced issues and we'll be talking about how they can be addressed. So let's start with the first one. If you see, like I mentioned a little while ago, we were relying more on momentum, and this is all. It's not manual. There is no manual intervention. Our data, the tons of data that we look at, it was suggesting that momentum is the factor which is leading, and that is what we were relying on. Based on the factors, as you know, we look at multiple factors, and we have a portfolio of factors also, if I can say so, if I can take the liberty to say so. So momentum was at the top, and based on that, we had picked up stocks. So the stocks that we had, which were pertaining to momentum, were 9 in our June portfolio. Quality, we had 2, and leverage, we had 1. But if you look at July 24, in terms of momentum, we have not picked up any stock because that's not a good factor to look at currently as per our algorithms and as per our data. So suddenly, most of our stocks are being picked based on the quality factor, and leverage remains the same. So that is one of the biggest reasons why we had such a high churn in this month. So 168% churn basically means if you had invested 100 rupees, you bought around 85 and you sold around 85 rupees. So you ended up, the turnover or the churning was around 170%. So that's what was seen in this month's rebalance. And that caused, of course, a lot of eyebrows were raised, but the reasoning is straightforward. And this is what the algorithm said. So we are just going by our tried and tested algorithm that we have been using since the last 4 years. And if you see one stock that had been retailed, it was Colgate Palmolive. It was a quality stock that was retailed. It is also, in sync with the sectoral distribution that I had talked about a little while back. Yeah. So we can move to the next slide. Yeah. So in Oil India Limited, so on 20th of May, they announced a bonus issue of 1:2. And the date, I think 2nd of July was the date. If you had the shares till then, you would be given bonus shares of Oil India Limited. So what ended up happening was that the people as in our clients who were holding Oil India Limited till the 2nd and who could not rebalance till that date, they were allotted more shares. But unfortunately, these bonus shares take up to 10 to 15 days to be credited in your respective demat accounts. Because of which, small case does not allow you to sell these shares. Because as per small case, on 2nd of July, you would have received shares in the proportion as stated. But in your demat account, you did not actually receive them. Because of which there was a difference. Small case wanted to sell, say, 100 shares, but you had only 66. So it did not let you continue. Because of which you could not sell oil and you could not buy one particular company's stocks, which you would have been able to buy if you would have gotten the money after selling oil. So now what can you do about it? We have discussed internally, we have evaluated the pros and cons of doing different things. There is an option of selling them through your demat account and then writing to small case, but that will lead to a lot of manual effort from your end, and it will lead to a lot of confusion when you try to buy again with that fund. So we suggest that you continue as is. Whatever has happened is okay. You can simply archive your order. There will be an option to archive. Even if you don't do that, that's fine. In the next rebalance update of August, you will be able to get the most recent portfolio of August, and the impact of the returns would not be a lot. So this is a conscious decision that we have taken to address this issue and tell our investors that please continue as is. You will see an archive button. You can click on that and you can let it be. You can let your oil shares be in your demat accounts. It's okay if you're unable to buy that one stock that we had suggested, and just continue as is. And in case you want to invest more, which is the second line of the table that you can see on the screen. So for those who are not fully rebalanced and who have faced this issue with Oil India Limited, and you want to invest more, whenever you are investing more, you will get an option of oil. You will get the list of all our 9 to 10 stocks in which oil will also be present. Just do not include it. Uncheck that option so that you don't end up buying more of this particular stock that we've already suggested. So I think this is about it, and we'll be very happy to look at the questions you have on all these points. So I will just hand it over to Vivek to continue with to talk about the latest blogs and the other questions we received in our Google form, while I will just have a look at all the questions you guys are sending on YouTube, and I'll make sure to try to answer as many as possible. Yeah, Vivek, over to you.
Okay, thank you, Isha. Thank you. So we got quite a few questions like every month, and these questions are related to rebalancing, returns, methodology, and investment and market guidance. So let's start with these questions. Okay. One of the questions that we are now these days getting is why are we not seeing more alpha from Gulaq Gear 6? Question asked by Virat. So I think this is something that we have addressed in past couple of Rebalance webinars also. Just because last couple of years the markets have been phenomenal. I think BSC 500 has given about 18% CAGR over last 5 years, which is quite good actually. And our portfolios obviously have done more than double of that. So what we have been telling last couple of months is these are very, very unreasonable expectations to have from either Gulaq Gear 6 or even broader markets in general, right? So, and this could lead to, if we have those unreasonably high expectations, it could lead to some of the very common mistakes like taking much more higher risk or maybe keep on churning in between portfolios. If you are not satisfied with one, you'll go on to another and then on to another. And that is why even if you look at this month's overall SIP or the money coming in into the mutual funds, the biggest allocation is right now these days to the thematic funds, right? So I remember in January, the allocation to thematic funds was about 4,800 crores per month, whereas in June, this is, I think, more than 20,000 crores. So the biggest allocation right now people are making is to these thematic funds, and we see past couple of months, a lot of thematic funds have been launched. Now, thematic funds are very tricky in the sense that obviously they give very good returns, but this quarter it is different thematic funds, and next quarter it could be different, and next year it will definitely be something else. So, what is required to make money in thematic funds is very, very precise timing, which is entry. Your entry has to be correct, and also your exit has to be correct because money keeps on rotating between these themes. So if money for tomorrow, let's say, start getting out of railway stocks or defense stocks, they'll fall very sharply, right? So in the background, if some manager is taking care of it, then it is good. But investors, what we have seen mostly is they tend to enter towards the last leg of those trends, and then they are left holding those thematic funds. So this is a thing we have observed for many years, right? So I think our expectations as investors should be moderate in nature. Right now, we are just looking at past few years' returns and thinking extrapolating those returns, and that is why I think we are getting these kind of questions. If you look at Gulaq Gear 6 returns, uh, I just checked last 1 year returns have been 80%. So I think they are pretty healthy. They're very good. So I think if we just look at, or if somebody has come in let's say last 3-4 months, obviously our alpha hasn't been there in last 3-4 months. So here I'd like to share this chart actually. So what this tells us is on the y-axis we have the probability of success, whereas if you look at the 1 month performance, so if anyone holds our portfolio Gulaq Gear 6 for 1 month, there is 34% chance that we will underperform the market, right? So for every 10 months, there'll be 3 to 4 months where we'll underperform. But if you hold this portfolio, stay invested for 3 months, that chance of underperformance reduces to 26%. So out of every 4 quarters, there'll still be 1 quarter where we'll underperform, right? And again, if you hold it for 6 months, this underperformance chance goes down to 15%. And 1 year, if you look at 1 year, there's just 4% chance. It's not zero still. We can still underperform over 1 year period, but it will still be 4%. But the idea is that the longer you hold portfolio, the higher chance it is that you will outperform the market. So obviously, if you have been with us for only 3-4 months, I can totally understand that you might not be happy with the returns. But what I have to share is this chart where what clearly tells us is if you stay invested, the longer you stay invested, the better chances you have of success, which is the Gulaq portfolios outperform the market. And this is not only for Gulaq. This is even for the broader market. So the chart on the right, which tells us that overall for 1 month period, there is a 41% chance that you will end up in negative returns, right? And if you keep holding for say 1 year equities, then that chance of underperformance or chance of negative return reduces to 14%, and over a 3 year period, it's negligible. So over a 3 year period, and this is as per last about 12 years of data. So if you hold equities for 3 years, then there's almost negligible chance that you lose money, and there's very high chance that you end up making money. So the whole idea here is the longer you stay invested in markets or in active funds, the higher chances you will have of this fund, at least specifically Gulaq Gear 6, beating the benchmark, right?
And I would like to add something to that, Vivek. Like what we saw that since there was some dip in Feb and March that we saw. So the people who joined us in January, they left in March, within 3 months. They said, okay, we've seen you for 3 months and now we are leaving you. They're still subscribed, but they may have exited. But to the contrary, if they would have stayed for 6 months, now if you look at the last 6 months return, it is around 20%, which is not
24,
bad.
24%.
24. Okay, it's about 24%, which is not bad. So that just I just wanted to reiterate the fact that it is always important to look at the longer term, because as we can see in Vivek's the graphs he's showing, for 3 months the chances of success are only 74% for Gulaq, whereas for 6 months it's 85%. So, and there is a live example we have which happened in the first half of the year.
Yeah.
So that's the takeaway, and that I hope people understand this more and more.
Okay, let's move ahead. Uh, So the question again, a lot of people asked us why there's a high churn of stocks. I think Isha has already covered, because this month primarily we have shifted from momentum to quality. That is why we are seeing a relatively higher churn. Even otherwise also, quant portfolios, whether it is quant mutual fund or any other quant fund, would actually have much higher churn as compared to other funds, and that works in their favor also. Obviously there's slight downside that you have to churn stocks, which means your brokerages and slippages are slightly higher, but there's a very good upside to this also. It helps us a lot in the risk management. And how it helps us is that any stock which is really not performing within a month or two, uh, it gets an exit signal, whereas the ones that are performing will be held for much longer, right? So so that's why if you look at our overall stocks, roughly in a year, about we select about 60 to 70 stocks. Out of them, two-third are profitable, one-third are still loss making. But if you see the highest, the biggest loss making stocks, at least this is the data for last year, the top 10 stocks lost about somewhere between 10 to 15% on average. So this is the stocks where we lost money. And how much we lost? We lost about 10 to 15% on average, whereas the best stocks made upwards of somewhere around 80 to 100%. So overall, how this is algorithm is working is it is helping us in better risk management, right? What's the best time to rebalance, beginning or end of week? I think the best time to rebalance obviously is as soon as we give out our rebalancing update. And this time we have seen and we acknowledge, maybe many of you were not able to rebalance on first and you had to rebalance on second, where you couldn't complete your rebalance. I think the big takeaway for us is better communication. So from next time, obviously, we would want to communicate this to everyone, uh, if there is such a case, and to the extent possible, at least try and avoid such cases, right? Yeah, so the best time to rebalance is as soon as we have issued the new or updated our portfolios. Yeah, my broker Dhan provides 80% of the sell value as margin to buy shares during rebalancing. This often leads to failed rebalances, requiring me to add more funds. To overcome this, I manually reduce the buy quantities to fit within the 80% margin, and then place add more order the next day when the remaining 20% margin is reached. Can you suggest a better and automated method? Yeah. So this question is asked by Abhishek. So Abhishek, I do not think this is actually the right thing, because when you are manually removing few stocks, what is happening is the actual allocation as per the algorithm that is getting changed. Uh, and ultimately, there is no workaround to this, because this is a regulatory requirement. Brokers can only give you 80% of the sell value to buy shares. This is a regulation from the SEBI side. So there is no workaround to this. The only thing is, either you, on that specific day when you are rebalancing, either you add that 20% funds more, which is obviously, I understand it's not the most efficient thing, or the second thing is you just proceed with the rebalance with 80% of your portfolio, and you come back the next day and you repair. There's a repair option which will be enabled if you are just rebalanced 80%. So the rest 20%, when the margin is released the next day, it will be rebalanced then. So I think that is what most of the investors use. I personally also use that one only. So I would encourage you to use one of these two methods, but not to manually touch these portfolios. Okay, next is it mandatory to add additional funds to the broker account during rebalancing? It's not mandatory, but yes, if you want to complete your rebalance on that very day, then you would need to add. I asked because 20% of the amounts from sold stocks is blocked until next day. Yes. So it is blocked, and the next day when you come in, then only you will be able to complete your rebalancing.
And to add
Isha,
to
you
that, Vivek, there is
yeah?
a recent, feature, so to say, that small case had added to the rebalancing journey, wherein on the first, if you are with a broker who's retaining 80% the first day and next day giving 20%, in that case, on the first day itself, small case will ask you to add 0.5% to 1% of your AUM, your traded value. This
Okay.
is because on the next day, when you are trying to rebalance with the remaining 20%, they are trying to so the rebalance of 20% on the next day is automated. You don't have to come back and manually do the repair. They have automated that journey. So
Okay. Yeah.
so that you don't have to come back the next day to add funds in case the market moves a little up. They are already on the first day asking you to add 0.5 to 1% because you're already in front of your screen. So now going forward, I think since last month, this new thing has been added by small case that on the first day itself, you will be asked to add 0.5 to 1%, which will cater to the price movement of the next day so that automatically next day it can be rebalanced.
Okay. लेट्स मूव अहेड. गुल्लक गियर 6 में हर महीने रीबैलेंस से पहले निवेश करना चाहिए या फिर रीबैलेंस के बाद निवेश करना चाहिए? ओके, बलवीर सिंह जी. हाँ जी, यहाँ पे आई थिंक रीबैलेंस से पहले इनएफिशिएंट होगा आपको इन्वेस्ट करना, बिकॉज आपने एक बार इन्वेस्ट कर दिया है और फिर उसके बाद आपने कुछ स्टॉक्स बाय किए, सेल किए, और जस्ट उसके बाद अगर आप रीबैलेंस कर रहे हैं तो उसमें फिर से काफी चर्निंग हो सकती है. तो द बेस्ट थिंग टू डू इन दिस केस इज कि आप पहले रीबैलेंस करिए और उसके बाद आप इन्वेस्ट मोर करिए. ठीक है. आई थिंक ये भी मोस्ट एफिशिएंट नहीं है. एटलीस्ट हमने स्मॉल केस की टीम को कम्युनिकेट भी किया है कि समथिंग कैन बी डन. अगर हम ये दोनों चीजें कंबाइन कर पाए, अगर हम रीबैलेंस और इन्वेस्ट मोर एक ही साथ कर पाए, आई थिंक दैट विल बी द मोस्ट एफिशिएंट थिंग. बट वो अभी तक पॉसिबल नहीं है स्मॉल केस के प्लेटफॉर्म पे. हमने ऑलरेडी ये यूजर फीडबैक दिया हुआ है स्मॉल केस को. दे आर वर्किंग ऑन इट. आई एम नॉट श्योर बाय व्हेन इट विल बी डन, बट this is a feedback which we have already shared with the small case team. Okay. Uh, since Gulaq portfolios gets rebalanced every month, it becomes difficult to do SIP because I have to pay all the charges twice. Yeah. Okay. Again, Prabal, as I told you, the best way is if we are able to do rebalancing and invest more at one go, that is the most efficient thing. But as of now, I don't think there is a way to avoid these invest more or SIP costs. Right? Is it possible to combine rebalancing? Yeah, that's what. Isha, you have anything to add to this?
No, Vivek, I think that's about it.
Okay, okay. How much should I invest to ensure the overall expense ratio involving, including fees, rebalancing, and broker charges is 1%? I think one thing is clear that we should, to the extent possible, choose brokers where your brokerages costs are very low. There are certain brokers where the brokerage cost is high, so obviously that will uh, be a hit. And our overall fees, if you want this overall to be 1%, I think then in that case, if you just take into account the small case fees, then this number is about 6 lakhs. So I think maybe about 8 to 9 lakhs should be a good, close to 10 lakhs would be something uh, where you will actually encounter overall less than 1% of the costs. So I think that is what maybe you can aim for if you wanted your overall cost to be less than 1%. Does the model account for macroeconomic factors like union budget policies and rate cuts? So anything that can be quantified, the model accounts for. So if you ask me what is to be expected in union budget, and based on those expectations, if we are taking those expectations into account, then no, because those are expectations. Anything, and they can turn out either ways, right? So those are the things that we cannot take into account. But if let's say a rate cut is happening, when it happens, after that, obviously those things are taken into account. The inflation, the interest rates, those are taken into account by our model, but not expectation of rate cut, because if it is just expectation, it is not certain, right? And that is why we do not we cannot take those things into account which are maybe rumors or maybe broadly expectations, because those can go either ways. But actual rate cuts, yes, we do take into account the actual rate cuts. I'm planning to scale my position to 50 lakhs in year 6. Any issue I need to be aware about? Arun. So Arun, I think the things that you should be aware about is, one is the slippages, because because 50 lakhs is fairly large amount. If we are rebalancing, some of the stocks might have much higher slippages because of the way uh, the order is routed through small case, right? So these are market orders in which the slippages could be higher. And the second thing is 50 lakhs. What we have always suggested is to practice good level of diversification in your portfolio. So I don't think 50 lakhs. So by that measure, let's say you should not put in any portfolio, be it Gear 6 or any other mutual fund or any one specific portfolio, you should not put maybe about more than 25%. So by that logic, if your overall portfolio is about 2 crores, then 25% of that is 50 lakhs, then you can do that safely. But if your overall portfolio is, let's say, 1 crore, and out of that you're putting 50 lakhs in Gear 6, and that's people ask us a lot because of the very good performance over the last few years. I don't think then that is a good idea. So if your overall portfolio is about 2 crores, so less than 25%, then you can put. But slippages would still remain. But Arun, maybe what you can actually check out is we have our PMS where the minimum ticket size is 50 lakhs. But in that, we take care of the rebalance, and we have our own execution logic due to which the slippages would be reduced drastically. So maybe you can check that out. It's out there on our gulaq.com website. There's a PMS section. You can check it out. If you like, maybe just leave in your details and our team will get in touch with you. Next is, I'm planning to deploy an additional 10 lakhs. Should I do a lump sum in this market condition, or is think it is SIP better? If SIP is better, then how many installments? I think Mohan, see, if you just look at purely data-driven approach, then deploying lump sum is good. But what I've seen is most of the investors, we are not comfortable psychologically investing at one go. So I think an easier decision, and which, if you are investing for the long run, is not a big decision, but maybe an easier decision for you might be that you divide your overall 10 lakhs in about maybe 4 installments overall, and over the next 4 months you keep investing. 4 to 5 is, I think, all right. These are, I think, smaller decisions. The main thing is you get inside the markets with these 10 lakhs, because if you keep on doing too much of analysis, you might not be able to decide. And for the 6 months or 1 year, if you just keep sitting outside, you will miss a good part of overall investment time. So the main important thing is you have a plan to enter the markets. Whether it is 3 months or 4 months or 6 months, it's not really big decision. Whatever you feel comfortable, I think anywhere between 3 to 6 is okay. Whatever you feel comfortable with, you can actually invest. But the important point is you get to point that you actually start investing, putting in this money over the next 3 to 6 months into markets. Okay. Okay. I've invested around 3 lakhs through SIP and achieved 15% returns over 9 months. Should I plan to exit upon reaching Sofali Patnaik? Oh, okay. I'm not sure how you're calculating these returns, but I think the returns over last 9 months are more than 15%. But the idea is the question you're asking is, should I plan to exit upon reaching this target or consider perpetual rebalancing? See, it depends on why you are investing. If you need this money for some financial goal that you are planning to, uh, that's why you are investing. So obviously, then it's a clear case that you should obviously exit. But if you really don't have any specific goal in mind for the near future, it's always good to stay invested in the markets for long term. Do not look at market valuations, whether they are undervalued or overvalued. I think it's always good because equity markets over long run generally tend to deliver the best returns overall. So yeah, if you do not have any specific near term financial goal, and when I say near term, it means maybe in next 1 or 2 years, then I think you can stay invested.
And Vivek, just to add, over here she says 15% over 9 months. I think this is could this be the XIRR, or maybe this is the absolute return? That's why, because she was doing SIP, so her XIRR would be much higher. I think that's why it's 15, because she's taken the absolute number. So she may have done a
Would
lot
be
of.
absolute. Yeah, XIRR would be higher.
Yeah,
Yes. So
that's one question that we receive from people, that hey, on your platform you're showing this much as the return, but why are we getting lesser? That could be because you've invested recently. So your return will be on 9 months, whatever money you had invested, you will get 9 month return. But if you have invested something just 1 month back, you will get that 1 month return, and both will be added to. So if you look at a
exactly.
absolute number, it will be much lesser. That confusion a lot of investors have.
Yeah. Okay. So Isha, I think we are done with these question answers. And if there are any more questions on YouTube, we
Yeah,
can take these. Yeah.
for sure. There are many, Vivek, so many different kinds of questions also this time.
Okay.
Uh, So Aditya Raghuram is asking that NRIs invested in Gear 6 have difficulties with rebalance because a lot of stocks are bought and sold. We will only get 60% of sell value on trading day and get remaining 40%. This is difficult to manage if invested capital is large. Have you
Yeah.
thought about keeping minimum number of stocks to sell and buy during rebalance and make algo better?
Yeah. So we really haven't optimized for that, because I think why you're asking this is because for NRIs, what I got to know is the transaction costs are also pretty high. So it is really not, and what I've seen is NRIs, either they have some family member who is an Indian and they will invest through them, or maybe another option could be PMS. But yeah, I can understand where you're coming from. But see, maximum investors really do not have this specific problem, and that's why we are not optimized for. We are optimized for slippages and other things, but not on the number of stocks really. Yeah. But maybe if you want to check out, you can check out our PMSs, because in PMSs we will be taking care of the overall rebalance. The brokerages are zero, and the execution is much more efficient, right? So if you can, if you want, you can check it out. As I told you, there the minimum ticket size is 50 lakhs.
Right.
Okay.
Okay. So I think, and when he says that, thought about keeping minimum number of stocks to sell and buy, it's similar to churn, what a lot of people ask us. So we will be, I think, I don't know if we'll be working on some low churn portfolio, but still, I think we are optimizing more We are more trying to look at the risk-adjusted returns right now than this. Okay, then Rajesh is asking how we can find the maximum drawdown in small case.
Okay, so Rajesh, I think one of the things, obviously, what you can do is if you go to small case, just below the chart where the data is, if you see Gulaq Gear 6 versus the benchmark, that chart, just below that, there's a link of downloading that chart, which will give you actually the daily returns. And using those daily returns, you can calculate the maximum drawdowns. Like that is one thing you can do. But we have also written a blog on this, and you'll be able to get the actual numbers through that blog. So I don't remember the exact name of the blog, but I think we wrote it a couple of months back. So you can go check out our blog section. I think there was this blog around deep dive on Gulaq performance, and in that you'll be able to find the uh, actual drawdowns as well.
Right. Someone's asking for the 3-year return. We have already shared that. So Ashutosh, you can rewind the video and see. In fact, you can also see the performance on our microsite, which is st.smallcase.com. You will be able to play around with different time periods, 1 month, 3 months, 6 months, and you can see how we have performed compared to the index. Okay. Now, SS is saying, how do you identify the change in the factor from momentum to quality?
See, this is dependent on our back tests and the market regimes we are in, right? So dependent on the macroeconomic factors, we identify the market regime we are in and which specific factors are best suited for this kind of market regime. That's how we actually finalize what are the factors that are best suited for this market environment. That is what is done in simple English. Yeah. Obviously, behind this, it's very, very complex algorithm, but in plain simple English, that is what we are trying to achieve.
Okay. Now, Pallav is asking that after this month's rebalance for Gear 6, I am seeing majority of my returns as realized and very less current returns in small case. I haven't booked any profits till now. Please help to understand this. So,
Yeah. So, Pallab, what is happening is why it is showing realized is because the stocks that we up were in our portfolio up until last month, all but one stock we have given the exit signal. So in your portfolio we have exited and those profits are booked. But what is the good thing that is happening is those all those profits are reinvested in the markets, right? So your portfolio is combination of the initial money put in plus the realized profits plus the uninvested, and the uninvested profits are small because pretty much all the stocks are new, which are selected on first. So whatever returns we have given in last 1 month, or rather last 10, 11 days, will be your unrealized profit, and rest everything would be realized. But your everything is invested into the markets. That's what it means. I hope that is clear. Isha, you want to add to it?
yeah, Vivek, I'll just add this. So I just opened my own small case account and I'm looking at my Gulaq portfolio. So just to let you know, if you have any doubt and if you have invested for more than a year, you will be able to see the XIR, which is the time weighted return. So that's at the bottom. And you can also see total returns. So total returns would consider, like Vivek said, the realized returns, even the dividends and the current returns. So you can refer to total returns to understand what is your actual total absolute return you have gotten till now, and XIRR to get the time weighted return. But Vivek, I think, has already clearly explained why current returns are different from realized and why you see so much of realized returns this year. And that's about it. Jitendra is asking, why did you exit Kochi Shipyard and few other good stocks? And is it going to be a 9-stock portfolio going forward?
So let me take the second part first. Uh, so 9 stock is on the lower side. What we typically see is around 12 stocks. Sometimes it goes up to even 15 at other times. I think it's the first time I'm seeing in the near future 9 stocks. So I think the expectation should be around 12 stocks. That is what on average we have. Yeah. And first part of the question, I think why we have exited. Normally, we do not address stock specific questions, but it is, I can tell you that what Isha and we discussed earlier, that till now, the market, what it was telling us is that uh, momentum stocks were giving us very good opportunity. But now what our algorithm tells us is that quality, the stocks which are better quality stocks, uh, are giving us much better opportunities in terms of risk reward from them. And that is why the algorithm has suggested to move out of these momentum stocks to these quality stocks now. And that is why the exit call was given. Yeah, it could still keep on moving up, right? And I think it is fine, as we have earlier stated, that there'll be few, maybe months or even quarters will underperform, right? But I think here what we have been saying is that investors who are associated with us should remain associated with us because they want to generate wealth over long run. And if you really are looking at generating returns in 3 or 6 months time frame, you'll be disappointed. Maybe then it's more a game of luck, right? But with certainty, with much more certainty, not 100%, but with much more certainty, if you stay invested in equity markets for long run, you'll get, obviously at the back end, there'll be some churn going on. Yeah, that's what I have to say.
Okay. Fenel Ahmad is asking, is averaging a good thing to do during a dip?
No, I do not think averaging is good. I've just written this post, I think yesterday only, because a lot of people ask that the way they approach investing is they always keep some cash. They won't invest because they'll just wait for markets to correct and then they'll invest. So what would have happened over last 1.5 years is what we are seeing is a lot of investors who are just waiting on the sidelines for some meaningful correction, right? So that is why this is not the best strategy. And it takes a lot of your effort, time to then actually time the market. That when do you get into the market, whether it is 3% correction, 5% correction, or 10% correction, right? So all of these things are not trivial in nature. You end up spending a lot of time on it, and at the end of the day, it really don't serve any purpose. It does not yield better returns. For most of the investors, that's what we have seen. So a much better, simpler strategy is you stay invested in the markets and do not try to time the market. Stay invested means as per your risk profile, as per your the risk that you can afford to take. You figure out an asset allocation that this is the maximum I can afford to invest in equity, and the rest I'll invest in debt. And you just follow that specific asset allocation. That is, I think, a much simpler solution rather than trying to do these kind of things. I do not think that's a very good strategy.
Okay. Rajiv is asking how to put money in this market condition. I think we've already discussed, SIP lump sum and how to go about it. So that would cater to that question. Uh, Rajesh says in the 6 month return, your return calculation process is wrong. Rebalancing came after market close. And next day, when we process our older uh, we process our order. Sold stocks are sold at less price and purchased stocks are purchased at a higher price. So that we lose something.
No, see, I think what small case does is, let's say today after market close, I've given an update. I've given a rebalance update. So in the returns calculation, small case will take tomorrow's end of day prices to calculate. And uh, tomorrow, let's say the market goes up. Okay. So all the stocks that I have to buy, obviously, I'll be buying at higher price. So I'm encountering some loss. But the stocks that I have to sell, on average, they'll also go up because overall markets have gone up. So I'm selling those stocks at higher prices. So overall, it matches out, right? So I do not think we are at a disadvantage. Obviously, sometime it could happen that the stocks that we wanted to sell, we did not get good prices, but the ones that we wanted to buy, we actually had ones that we wanted to buy corrected, and we got at a much better price. So those kind of things are mostly random, but overall, if you see, if the markets have gone up, let's say you have to sell 20,000 worth of stocks, so you'll be getting 21,000, but आपका buying price it will be higher. So overall net it's one and the same thing. Regarding the returns calculation methodology, I do not think it's incorrect. And if you still feel so, maybe you can write to us. We'll be happy to explain you that. But I do not think it's incorrect. It is correct. Yeah, obviously it will be different for everyone, because somebody who has rebalanced in the morning versus evening, there will be slight difference. But the way we are following, or the way small case is calculating, I do not think it's incorrect. It is, yeah. But happy to listen to you more. If you still feel it's incorrect, please do write to us. We'll be happy to get on a call and explain you, discuss with you.
Right. Okay. So next is Gaurav. Gaurav Dwivedi says, I am new to this community. It will be of great help if you can tell me how to do the rebalancing and what are the other tools.
Okay, Gaurav, welcome to the Gulaq family. So I think it's pretty simple. What happens is, when we issue our rebalance update on your small case, there'll be notification that this specific Gulaq Gear 6, or whichever Gulaq you have portfolio you have invested in, has been updated by the manager. So when the markets open, you go to your small case app, select this specific portfolio, and there'll be a button of updating your portfolio or rebalancing your portfolio. You click, and all the stocks that we have recommended to buy and sell will come up, right? That day, because the SEBI permits that whatever you are selling, that amount, only 80% of the value is available for buy. So there'll be some small portion uh, which will not be, you won't be able to complete that rebalance on that day, but 20% of the portfolio gets rebalanced the next day. So there's small slippage cost attached to it. But overall, that is the process. Or the other thing that you can do is, which not many people prefer, is you put in 20% more that very day and then complete the rebalance. But overall, it's quite, you'll do it for 1 month and you'll figure out that it's quite simple overall to rebalance. And in case you are finding any difficulty, please feel free to get in touch with our customer care uh, team, and we'll be happy to assist you in this rebalancing.
Saurav is asking, along with monthly rebalance, don't you think that ad hoc rebalance option should also be there for certain market dynamics?
Yeah, Saurabh. So this is, see, our expertise is in data driven systematic approach. So we use whatever data is available out there, and how do you make consistent rules so that if you follow those rules over long run, you end up making good profit overall. So that's what we are good at, right? We are not good at calling the markets that this is likely to happen, so you do this. So we have tried out this approach individually, also stock wise, let's say profit booking, or stock wise, individual stock wise stop losses. All these things we have tried in the past. So, but overall, what we have seen is this current approach works the best. What could happen is, maybe in some stocks we might end up making profit or avoid those losses, but net over long run, this specific approach would only make sense. uh, but at the same time, what I'm also trying to say is, we will never get into manual stock picking or manual decision making, because that's what we are not good at. We are good at making these algorithms, uh, which is a building a very systematic way of selecting stocks or creating portfolios. So we would always follow that systematic approach only. But otherwise, if, as I've said, we have already systematically tested these rules of on individual stocks also, and net they do not add any value uh, to the portfolio. So that's why we don't have such rules in place.
Right. So, Vivek, since you are on this topic, I read one of the comments or questions where they said, can you add a human filter on top of the algo? So what do you think about that? Should
Yeah,
we?
that's what I have said, Isha, that we are not good at that. That is not our core skill set or the area of expertise, right? So as much as I want to try, there'll be few decisions. Obviously, I'll take good, but then there'll be other few decisions where we won't be doing good. So net, I won't be able to add value if I start making those kind of decisions. And really, I don't think investors would want us to get into that, because that is not our expertise. Our expertise is in data driven, uh, systematic approach, and that is where we want to get better at. So our focus is not to get better at individually manually picking stocks or taking those calls, but getting better at making our algorithms better. How can we make these algorithms better? What have we learned from last 1 year, and incorporated that in our algorithms now? So that is where our focus is on. Yeah.
All right. Okay, some operational questions that I can cater to. So one says after rebalancing this time, all profit is booked again, booked and invested again. Is it normal? So yeah, I think Vivek had answered this. If depending on the number of stocks that are being rebalanced, your stocks will be whatever profits you have earned by selling the stocks re will be invested again in the buy quantity. So this is a very normal situation, and I understand you're saying you're a new investor, but you will see as in when you continue with us, this is a very regular process. This is how rebalancing happens. So that's why you were discussing, the performance also, you should look at the total returns, the XIRR, and the amount that you've put in. Then Dhananjay is saying, can we add more quantity in multiple with your rebalancing quantity? Unfortunately, we also mentioned that this is not possible. When you're investing, when you're rebalancing, you cannot invest more at the same time. So we would ideally suggest for you to not play with the weightages, because there is an option to add or subtract the quantity that you are selling and buying. But we would really recommend you not to do that, because it could lead to differences between what you are seeing and what we have recommended. So rebalance once, and then if you want to add more the next day, you can invest more money. But we are talking to small case to try to at least club these two activities, rebalancing and investing more at the same time. We are still in discussion with them to get this feature for our clients. Now coming to Faisal, in case someone wants to invest more, you have a feature that decides stocks to be added in specific ratios. Could you have same feature in case you want to withdraw? Yes, definitely. For partial withdrawal, Faisal, this feature already exists. So when you go and try to withdraw or exit, it will ask you how much money that you want to exit. And in the same ratio of our portfolio, it will let you exit from the stocks. So that feature already exists. In case you need help with understanding how to go about it, please reach out to us on our customer support number and our email ID. So on gulaq.com, you will find our email ID and customer support number both. Now coming to Ankur, he says Gear 6 has one of the lowest minimum amount requirement, that is 24K, compared to peers. Does it affect the returns in current all-time high environment? Vivek, what do you think?
Uh, does it affect the returns? I'm not sure why would it be the case. So let's say if we were to create portfolio with 1 lakh, would I have higher returns?
I think what they're saying is that with 24K, we may not be able to add all the stocks. The certain stocks which are priced very high, we may end up skipping them or eliminating them from the portfolio.
Um, I'm not really sure about this. See, if we were to, okay, we won't be able to add higher price stocks. That is correct in lower price, but that is also, I think that is working to our advantage rather, because and this is something that we have seen in the past. I remember doing this. If we were to add higher price stocks versus lower price stocks, these lower price stocks actually, for some reason we haven't been able to figure out, but they tend to perform better. So So the actual act of creating a smaller portfolio by removing few of the higher price stocks has actually helped us overall. We did not expect it, but we have been running this for now few years, and we actually were ourselves surprised by this logic. I cannot state why it happens, but actually it happens that when you remove those higher price stocks from these portfolios, this has ended up better. So yeah, I do not think then in that case, if we increase it to say 1 lakh or 2 lakh, that is going to help us in overall returns. It might help us a bit in risk adjusted returns, in the sense that our returns might be slightly lower, but at the same time, risk would also reduce a bit because it's more diversified. But if you just talk in terms of absolute returns, no, I don't think it will help. Rather, it will actually reduce the returns a bit.
Got
Yeah.
it. Got it. Gaurav is also asking how will a new entrant know that the rebalancing is required and how to do it? So Gaurav, yeah, you
Yeah.
will get a notification.
You'll get a notification, a mail from us, and I think we should start that WhatsApp notifications or WhatsApp channel. So
Yeah.
we have been thinking about it. So pretty soon we'll do that. But you'll get an email from us and from Small Case platform also. So, yeah.
Okay, Ravi says that ever since he invested, he joined in Feb 2nd, we are underperforming the index. Should we be worried? But are we, Vivek? I'm not sure. Since Feb till now, last six
Yes,
months we
I
saw we
think
were at 24%.
no. January, if you include January, then we are not underperforming. We are outperforming. But January was the month I remember where we actually had a huge alpha.
Hmm.
But Uh, February, from February till now, I think there's small underperformance. That is there. Yeah. But should you be worried? I think this is expected. What we have seen, what we have been communicating, we have been very transparent about this. When people subscribe, we always tell them about what is to be expected. So out of maybe every 4 years or 5 years, it could be the case that 1 year we underperform, or out of every 4 5 quarters, there is 1 or 2 quarters where we'll underperform. And that is the nature of this business, this market, that it is almost impossible for anyone to beat the markets month on month or quarter on quarter or even year on year, right? So this is, I think, to be expected from any fund,
Right.
right?
And
So
overall, we
yeah,
are still going up. I mean, underperformance, I think, is very slight to the tune of 1 to 2%. But overall, we are still very positive if we look at the overall returns. We do not compare
overall
us.
you means over longer term?
No, no, the actual returns, underperformance compared to the
Yes,
index, yes, but the actual returns, if we see,
actual returns are positive. Yeah,
yeah.
but as compared to our benchmark BSE 500, we are slightly below if you consider from Feb till now. Yeah.
Okay, Shriyansh says, which is better, your PMS or Gulaq Pearsons?
I think PMS because we make more fees there. No, see, these are two different products. One is more concentrated, but it's meant for somebody who is investing lower amount of money. PMS is different in the sense that we have almost 80 to 100 stocks. And still, with that very large portfolio, we have been able to produce very good alpha, which many people find surprising. There, the advantage is obviously the disadvantage is you've got to start with 50 lakhs, right? That's a big disadvantage. But the advantage is then we are taking care of all the execution, everything, and you don't need to do anything. And we have our own execution algorithms, which we can, because in PMS, we can send orders on your behalf. We can, on your behalf, uh, rebalance your portfolio. So we are able to do it much more efficiently. So there are few advantages, there are few disadvantages. I think both of these are, uh, by nature, they are same. The methodology is more or less the same, but they're meant for different kind of investors. They're meant for different kind of things you're looking for. So they're different in that sense. I do not think one is better than the other, right? If you want more details, you can get in touch with our team. We'll be happy to explain you in much more detail the differences of these two products. and we can help you decide. But these are two different products at the end of the day. Yeah.
Ravi says, please come to mutual funds.
Sorry?
Ravi is asking us to come into the mutual fund space.
In the mutual fund, so Ravi, we are definitely getting into it. Not launch our own mutual fund. That might take some more time. But I think the initial idea is that we use these quantitative methodologies, quant-driven or systematic approach to construct portfolio of mutual funds. So that is something that we are working on. We are very eager to launch it, and pretty soon you will see those kind of advisory services from our side. But yeah, launching our own mutual fund is also on the cards. We are discussing it, but that is slightly a longer term project, which might take few years. But in the near future, we will definitely see these model portfolios of mutual funds from us.
Uh, okay, I think I'll have to be a little quick because we are already beyond time and there are lots of questions that are still coming in.
Sure.
Some people say their question on the Google form has not been answered, so please feel free to send it here right now. What do we do because your rebalance is very quickly? Someone says we want to invest for long term. Then what do we do because your rebalance is very quickly? I think they're saying that you're rebalancing every month. So how is it long term?
So it is long term because your stocks or the money is invested in the market. So even if whatever profits are there, uh, your profits are getting booked, but then they are reinvested in the markets. So by that sense, it is longer term. Obviously, the idea here is to make money over long run. If you ask me that you have 6 months, you want to invest some money in 6 months or for 1 year, we'll never recommend Gulaq Year 6. In that case, if you're investing for short term, go for a much bigger allocation to debt. So maybe something like put only 20-30% in equity and rest in debt, or maybe put everything in debt, right? So equities, if you are investing anything into equities, the expectations can only materialize over long run, right? And here the churning, or obviously at the back end churning is going on, and that is the same for mutual funds also. Let's say mutual fund, you buy a mutual fund, you stay invested, but at the back end, your mutual fund manager is actually buying and selling a lot of stuff in the background, right? So that is happening. Similar thing is happening here, right? Only difference is in mutual funds, the taxation wise, it is much better. But here the advantage is you don't get these kind of strategies maybe in mutual funds, right? So that way it's slightly different, but these portfolios are actually meant to stay invested for long term only. Then you will be able to actually create good wealth that equities are known for.
Then Balbir says, what is the minimum cash requirement for the date of rebalancing? I think, Balbir, there is no, see, 20% of your funds will come the next day and they will be auto rebalanced. So that is fine. You do not have to really worry about 20% of your portfolio getting rebalanced the next day. But on the first day, you will have to put in going forward 0.5% to 1% of the amount that you have invested. That much money you will have to put in for you to be able to rebalance on the day one. And this is a recent feature. Earlier, this requirement was also not present. Okay, now someone is saying, मैं लास्ट मंथ से इन्वेस्ट कर रहा हूँ और हर मंथ 50,000 के आसपास 5 साल से 50% दिख रहा है, क्या आगे भी यही रिटर्न मिल सकता है?
No, I don't think you'll get similar returns in the future, because when we launched, obviously the markets were at COVID lows. And as I've already been telling, see, in overall long run, I can tell you my expectations. I don't know. My expectation is that markets will grow at 12 to 15%. Again, all of these active funds, many times they underperform, uh, and at times they outperform also. So there's an element of risk when you invest in active funds, right? And some of them who are doing well can generate, maybe, I think any active fund, if it can generate say 5-6% alpha over long run, has done a phenomenal job. I'm not saying we can do it or we will do it, but that is to be expected from active mutual funds or active small case portfolios. I think that is one should expect. Recently, the expectations have been very, very high, and most of the investors would be disappointed because I don't think any way that the markets can deliver the kind of returns that they have given in the recent past, last 2, 3 years.
Okay. So, Vivek, an important question. Mohit Gupta asks, is Gulaq doing to avoid front running from Gulaq internal employees? Question is raised because similar issue got noticed by SEBI in quant fund.
Yeah. I think this is something that we discussed internally also. But what is happening is, and we should, I think, talk about this more often. So what happens is, let's say today, end of day when the market ends, I take all the end of day data. We run our algorithms and we update our portfolio, and then we send it to small case, right? And tomorrow at the market open, uh, every small case investor, whether I am a small case investor, Isha is a small case investor, or anyone from outside the company, they will have that information uh, only tomorrow at the market open. So there is no way actually, I don't think there is any way an ST employee can actually get involved in front running just because all this rebalancing is happening after market hour, and the next day when the market opens, everyone has that information, that same information, and you can choose to act on it or ignore it. But that information is available to you at the same time when the market opens, uh, and same is with us, right? So I don't think there is any way uh, any ST employee can get involved in this front run. Yeah.
And we have these strict policies internally where we do not allow. So only the strategy team will communicate it, like Vivek said, at the end of the market close, so that by the time we upload, we can't take any action. Then Ravi says you tweaked model to prioritize quality over momentum. Isn't that manual intervention? So no, Ravi, we did not tweak it manually. This was all through the algos. What we are telling you, the change that has been made, this is also a result of the algo. So there was no manual intervention to do this. It was based on the tons of data and so many factors, so many things that we actually look at, all by way of data, that this was the output of the algorithm. And Manu George says that our algo sees opportunities in value, not in momentum. No, that's not correct. It is only this month that our algo shifted more from momentum to quality. And it can continue to shift depending on how the market dynamics change. Every month we run a rebalance, and every month we come to you with the results that we see. So it's not necessary that we will stick to quality. It totally depends on the market conditions. A lot of people are asking questions that we have already addressed at the beginning. So I would request you to, go back. The video will be available on YouTube. So the reason for downsizing from 15 to 9, that's not correct. We are not planning anything like that. And then, how rebalancing is done, why there is too much churning. All of these questions we have already addressed. About realized profit also. Okay, Alok has an interesting question. Okay, he says that are there any common stocks in PMS and small case?
There'll be common stocks, but there'll be very few. See, our Gulaq portfolio is on average about 12 stocks, whereas PMS portfolio has about 80 to 100 stocks. So the overlap could be very, very small.
Ashutosh says it's becoming too much of a headache to manage the rebalances.
Yeah, I think this time, if you did rebalance, if you actually rebalanced on second, then I can totally understand. It is a big headache, and I'm also going through it. So I think what is required is the best we can do from our side is be more open, be more proactive in communicating these kind of things if they were to happen. And if there's any chance that we can actually avoid this, we from our side would avoid. But I think even after all of this, even after these things are taken care, like the issue of Oil India, it will still be about few minutes worth of work every month that we'll need to do. Yeah, that is, I think, cannot be avoided. I
That
can't think
comes
of
with the
any
kind
way
of
it can be avoided.
product.
Sorry?
So I was just saying that comes with the kind of product that we all have invested in.
Yeah, yeah.
We all have to do that. Yeah. Okay, so Alok saying how many times one has to see his or her portfolio in a day?
How many times one need to see?
Yeah, one,
I
yeah.
think I can tell you what happens if the markets are rising and if our portfolio is doing good. Uh, People would obviously be seeing it multiple times in a day. But if our portfolio is not doing well, maybe they'll see once a month. But the important thing to realize here is it does not matter. No matter whether you're looking at it 10 times or only once a month, your returns will still be the same.
Yeah.
So up to you.
And I know what will happen is if the portfolio is doing well, you'll talk about us well on social media and to your friends. If it's going down, you will say, "Oh, Gulaq's not a good advisor." So, or hey, what's happening to the markets? It will cause anxiety or a lot of happiness. So that's why we say invest for the long term, which means you do not really need to look at your portfolio often. Just once a month when we are rebalancing, even if you look, then that's more than enough. Okay, lots of questions coming in still. Uh, let's see what it is. Do you account for upcoming budget when picking stocks?
Yeah, I think we have already answered. This is something that we cannot account for. Only it can be put down in data. Those are the kind of factors we look at. But no budget related predictions. We don't do that. I think I read Isha. One of the question by Bhushan is, what shall I do with my realized profit? I have to reinvest it in my own, or will you reinvest? Yeah, I think it always gets reinvested on its own. That's why that is the good thing. So you don't need to do anything. Whatever profits are there, the small case app will actually account for those profits and they'll get reinvested back.
Uh, I think that's about it. I think we have covered most of the questions, Vivek.
Okay.
Yeah, most of them I see are repeating, but I hope we have not missed out on anything. If in case we have, like I said, you have our customer support team's number as well as email ID. Please reach out to them and we will be happy to answer any other question. Uh, thank you so much for joining. Thanks a lot, Vivek.
Thank you, Isha. Thank you, everyone. Thanks a lot.